Hey everyone, one of the coaches of Unga Academy here, and welcome back to the usual chat that we have every weekend about the trends of the markets. But before we start and see what happened on the markets this week, as always, I invite you to please subscribe to our channel to stay updated on the release of all our new videos. And hey, why not also leave us a like to support our work? We'd really appreciate that. Thanks so much. Hi, we are the Unga Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unga, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Okay, so as you know, last week we had pretty high volatility levels, and we might say that they continued to be quite high this week as well. If you take a look at the 5-day returns of the two main US stock indexes, namely the Nasdaq and the mini S&P 500, you'll see that they are slightly negative, with returns of about less 0.3% and negative 1.5% respectively. This week there were some abrupt movements in the markets, especially on Thursday, due to the release of the data about inflation, which caused some large movements. As for the European indexes, they were finally able to recover slightly compared to their performance at the start of the week. In fact, both the DAX and the Euro stocks gained more than 2 to 2.5%. The bond sector is once again negative, and this applies to both the American and the European bonds. We see that the Bund lost 0.5%, and the 30-year American bond went down by 1%. The entire energy sector has slowed down its upward run, which has been going on for several weeks, so the 5-day returns of these markets are now very low. Crude oil is slightly negative, whereas natural gas fell sharply, losing as much as 15% in just 1 week. On the other hand, the metal sector was positive, with the only exception of platinum. The entire meat sector was also rising, and these markets have been making very good returns. Up and downs for the soft commodities, in particular for coffee, which had 2 very positive days but now is going through a small downward retracement. We see that the cereal sector is also very positive. Now let's take a look at the currencies. We see that after last week's strong rally, the euro-dollar had a much calmer week, and the same goes for the British pound and other currency pairs. Finally, let's move on to cryptocurrencies, which seems to have been slightly recovering in the last 5 days. In fact, Bitcoin is now back above $40,000. Now let's take a look at the volatility term structure. And as you can see, despite the presence of the market movers, the term structure has remained in contango. However, the VIX is still at medium-high levels with values that exceed 24 points. Finally, let's check out the rollovers to perform next week. On Wednesday, 16th of Feb, we'll have to roll over crude oil. Then natural gas will follow. And then on next Friday, so Friday the 18th, we'll also have to roll over the sugar future. And with that, our weekly overview of the markets is over. If you're interested in investing in markets with a systematic trading approach, just like we do here at the Unga Academy, we have an interesting resource for you. It's a link where we're going to leave you in the description of this video. And that link will take you to a page where you'll be able to access a free presentation by Andrea Unga, who will introduce you to the world of systematic trading. You'll also be able to get a free copy of our best-selling book, The Unga Method, covering only the shipping costs. And finally, if you want, you'll also be able to book a call with one of our tutors to get a free strategy session. But before saying goodbye, as always, I ask you to please leave us a like for this video, if you enjoyed it, of course, and to subscribe to our channel to stay updated on the release of all our new videos. Greetings to all of you, and we'll see you next week. Bye-bye.